It is a pleasure to welcome all of you today on behalf of the Turk Trade Board. My name is Hayrettin Çaycı, President of Turk Trade. I would also like to extend my thanks to our distinguished speakers and our moderator, and I am pleased to greet all participants who have taken the time to join us for this important session. Let me briefly introduce Turk Trade. Founded in 1983, our association brings together leading exporters, banks, logistic providers, and key actors across Turkey's foreign trade ecosystem. Our mission to strengthen Turkey's trade structure, support essential reform, and enhance the global competitiveness of Turkish industry. Today's webinar, New Trump Tariff Business Opportunities for Turkish Companies Exporting to the United States, will explore the current and upcoming United States custom duties, their potential impact on Turkish manufacturers, and the practical strategies company can consider during this period. We are honored to host Mr. Dharmendra Choudhary and Mr. David Murphy, partners at GDLSK Law, who will share their valuable insights with us. I would also like to offer special thanks to Mr. Reşat, Eraksoy, General Manager of Actecon, for moderating today's session and for shaping the structure of this webinar. Once again, welcome everyone. I wish you a productive and insightful session. I now hand the floor over to our moderator, Mr. Eraksoy. Please, Mr. Eraksoy.
Thank you, Mr. President, for your kind words. We welcome all our guests joining this webinar. Special thanks to Ms. İlfeta Aksoy, who relentlessly pursued this webinar from start to finish and made this webinar possible. Today, we have special guests who are experts in their fields. Mr. Dharmendra Choudhary and Mr. David Murphy are one of the leading experts in international trade and customs practice areas, working at, I will try to spell the longer version of the law firm, Grunfeld, Desiderio, Lebowitz, Silverman, and Kleshstad LLP. I will just shorten it Grunfeld with your permission. Well, as the famous Chinese proverb says, may you live in interesting times. This proverb is actually used as a curse, but we will describe it as wishing well. Well, we may change it to may you live in Trump times. Then this would really mean interesting times, both good and bad. As Mr. Trump challenges all the post-World War II institutions, he really made an impact on world trade. As the biggest economy and one of the biggest buyers of goods in the world, in line with the slogan, Make America Great Again, he changed the US's trade policy. He single-handedly changed the course of trade with the increased tariffs. In any case, the only thing exporters can do is to understand and then to adapt and use these new policies to their interests. Today, we have very knowledgeable experts who can give us valuable information on how to leverage this new trade environment to the Turkish exporters' benefits. So, if I may say a few words about our presenters today, Mr. Dharmendra Choudhary is a resident partner in Washington, D.C., in Grunfeld, representing foreign exporters and U.S. importers in trade remedy proceedings before the U.S. Department of Commerce, U.S. International Trade Commission, and in litigation before the U.S. Court of International Trade and Court of Appeals for the Federal Circuit. He has significant experience handling various facets of anti-dumping duty and countervailing duty cases from market and non-market economies. Mr. David Murphy is a resident partner in New York office, and Mr. Murphy has more than 30 years experience in handling complex cross-border issues with respect to customs and trade, including US import and export control, including classification, valuation, marking, origin licensing, other governmental agency requirements, audits and investigations, international sanctions programs, and etc. He has acted counsel in numerous acquisitions and litigations. Mr. Murphy has developed numerous internal compliance programs for imports and export compliance, and the U.S. Customs Trade Partnership Against Terrorism. Mr. Murphy is also a licensed U.S. customs broker, a certified customs specialist, and an accredited zone specialist. So as you can understand from my brief introduction, these gentlemen are very knowledgeable and experts about international trade and customs issues. So I give the floor to Mr. Dharmendra Choudhary and then to Mr. David Murphy for their enlightening presentation. Please, sirs.
Thank you, Reşat. Good evening, Honorable President and office bearers of Turk Trade Association, esteemed members of Turkish business community, my dear friend Reşat from Actecon. Good evening to all of you, and good morning to my friend and colleague David from New York. As Reşat laid out in his opening, the United States trade tariff environment has undergone a profound transformation in 2025. And while, as Reşat correctly noted, and while these changes present genuine challenges, daunting challenges, they also do open unexpected pathways for those who understand the architecture of the tariff system and are willing to think creatively about their supply chains. Over the next couple of hours, we are going to dive deep into these issues, but broadly, we will examine three critical areas, pillars. One, the mechanics of Trump's tariff framework. Two, the real impact on different sectors, including automotive, steel, aluminum. And then David will specifically focus on specific strategies to mitigate duty exposure in this new environment. I'll say that it has been a challenge for us also staying in lockstep with everyday changes in Trump tariffs. But at GDLSK, we have successfully done so through great team effort and coordination and holding weekly meetings where we brainstorm best strategies or best solutions to complex issues. In addition, I should also mention that I and my firm has been representing several Turkish companies in ongoing anti-dumping and countervailing duty proceedings. Last month, we had a notable victory at Court of Appeals for the Federal Circuit, the second highest court in the United States, for Kaptan Demir in the important countervailing duty proceeding on a very critical issue. We won that issue. I understand today there are several aluminum company executives among the audience of this webinar with us today. I should note that I personally am representing several aluminum sheet, aluminum foil, and aluminum extrusion companies in ongoing anti-dumping countervailing duty proceeding. So it's very interesting to meet all of you. With this introduction, let me dive. I will share my screen and I will start the presentation, the first part of the presentation, which will be followed by David after me. So I'm sharing my screen. Hopefully you can see this. So these are the topics that we will go through. And let me start with the first, Customs 101, which you know, but I will just lay out once again. So as you know, imports, when they are done in United States, they have to be declared to Customs Department, CBP. Importer of record is solely responsible for paying duty upon entry. And if any those duties are paid provisionally, they're thereafter liquidated, and any additional duty is also due from the importer. Duty must, I will not say everything. My objective is to generally give you a general perspective. So duty should be paid within 10 days of date of entry, and goods can be released before payment also. Importantly, importer is required to post bond as security, and bond amount is set by customs, and then surety company issue the bond. They demand collateral. There are a lot of issues going on these days with bonding, enhanced bonding, bond stacking. We are not going to dive deep, but I will just lay out. The US importer can be a US based company, or it can also be a foreign seller or agent. Importantly, importer of record is required to exercise reasonable care in entering goods. If not, then there are severe penalties and liabilities on him. How is duty computed on entry of goods? There are three aspects to it. One is classification, second is valuation, and third is country of origin. All three require careful scrutiny. Classification is based on there are 99 chapters in US tariffs, so your goods have to fit into one of those subheadings, tariff subheadings. Then valuation is done under valuation rules. The goods value that is declared, that is typically accepted with some exceptions and adjustments. And then country of origin is a significant prong, especially when goods are manufactured in multiple countries. Then the CBP applies a substantial transformation test to determine country of origin. And a lot of cases are...
Sorry, can we change it to full screen, the display setting to full screen, Dharmendra?
Are you not seeing my full screen?
No, it's not in presentation mode, full presentation mode.
Is it better now?
Okay, it's better.
Dharmendra, hit slideshow and present from current slide. Slideshow at the top. See where it says slideshow? Yep.
Yeah.
And from current slide at the top there.
Oh, okay. Okay, can you see now?
No, you didn't click it. Click it.
Or you can change the display settings at the bottom. Okay, I think it's a bit better.
Is it
okay.
proper now? Or still not better? David, would you like to share the screen then?
Okay.
Can you open it up?
I think it's bottom side. You can see. You did more focus on right bottom and left side. You can click for the full screen.
Trade policy. David, can you try to share it if I am having trouble?
Sure.
I'm stopping sharing the screen. Let us see if David is able to pull it up.
Can you see my screen?
Yeah, I can see.
Is it full screen? Or
it is not.
Okay, hold on. Let me try again. It's sharing the wrong screen. Okay.
May I show you?
Yeah, for some reason I'm having a problem with my computer.
Okay.
So let me try once again then.
Here, if you can see my screen at the bottom, you see there is an icon. If you click it,
yeah.
Right?
Okay, let me try once again.
Okay.
Is it showing now or?
Click it, please. Click this icon. Not this one. A little bit left. A little bit left. The small icon.
Can you see it now?
Yeah. Okay. Perfect.
So who is sharing? David, are you sharing or I am sharing?
I think I'm sharing, but yes.
Okay. It's
Is it
better.
full screen for everybody?
For me, it's
Yes,
full
it
screen.
is.
Mhm.
Okay. Go ahead, Dharmendra.
Okay, good. So
Sorry for the interruption.
okay, so I think I was speaking about the duty computation, which is based on three factors: classification, valuation, and country of origin. Country of origin is a significant issue because it's based on substantial transformation test, and country of origin plays out in other contexts also, like circumvention, scope ruling, etc. So it's very important, especially for manufacturers who are manufacturing. And typically, manufacturers are using multiple countries these days to manufacture goods because they are moving their supply chains. They're trying to change the country of origin based on the trying to reduce the tariff based on which country is more favorable. But you have to know those rules. So, okay, I am America first trade policy. When Trump too, he came, he won on this basically platform. Uh, and upon assuming office, he tasked Secretary of Commerce, Treasury, and USTR to examine US trade deficits, assessing the implication, and recommending measures like global tariff. Then I mean, the most important of them is IPA, Tariff International Economic Emergency Economic Powers Act, which we will see now. But can you go to the next slide, David? Yeah. So I know that Trump has imposed a number of tariffs, and to understand them, at least we have broken them down into two broad categories. The first category is based on the country of origin, which means that the tariff varies from country to country. The first is drug or fentanyl tariffs, which was imposed only on three countries so far: Canada, Mexico, and China. Canada 35%, Mexico 25%, China 10%. Then second, the most famous is reciprocal tariff, which was imposed to allegedly counterbalance trade deficits United States was having. 72 countries, this tariff was imposed, ranging from 10% to 41% based on the amended reciprocal tariff that covers 72% and 72 countries. And on all the remaining countries, there is a universal tariff of 10%, except there are exceptions, three countries: Canada, Mexico, and China, because there are other tariffs on them. Of course, China, there is a 10% this tariff, reciprocal tariff also. Then there are special tariffs only on three countries, which we will call foreign relations tariff. India for Russian oil tariff 25%, Brazil 40%, and Venezuela, again, some kind of oil tariff of 25%. Now, this reciprocal tariff and fentanyl tariff, these two tariffs are subject of ongoing litigation before US Supreme Court. Oral arguments were held last month, and a decision is expected soon. We will talk further about this litigation. Second compartment of tariffs are based on products. Most famous of them are Section 232 tariffs, which has mushroomed and continues to mushroom. So it started famously with steel and aluminum tariff in Trump 1 administration, and Turkey was a victim of those. Trump suddenly raised the tariff one day from 25% to 50% in 2018, 2019. And astonishingly, the courts upheld it also. CFC upheld that. So when Trump assumed office this time, he continued those tariffs on steel, aluminum, And he enhanced subsequently the duty rates from 25% to 50% in case of steel and 10% to 50% in case of aluminum. Then automobile and parts, they also have been levied 50% now. Upholstered furniture, 25%, and going to increase to 30% next year. Kitchen cabinets, vanities and parts, 25%. Medium duty and heavy duty trucks, beginning November 1, 2025, 25%, and on buses, 10%. And then lastly, pharma, semiconductors, and jet engines and all. Ongoing investigation are going on all these products, and some kind of a 232 tariff will be imposed. Now remember, these all auto, steel, aluminum, copper, etc., these all Section 232 tariffs are imposed on all countries in the world. They do not discriminate. However, Trump has, based on his one-on-one or bilateral treaties, he's granting some sort of a ramp off or some kind of a exemption, not total exemption, but partial exemption or some kind of a better deal to some of the countries on Section 232. But otherwise, if not granted, they are universally applicable. Okay, let's move on to the next slide. Fentanyl tariff. Well, let's start with very briefly. So as I said, on February 1, 2025, Trump imposed 10% tariffs on China, which was subsequently raised to 20%, brought back down to 10% once again. And on Canada, he imposed 25%, giving some on potash and energy sources, it was only 10%. And subsequently, he got angry with Canada. He raised it to 35%. So fentanyl tariff, as I said, is to counterbalance or to punish a country for its alleged not be able to stop illegal drug flows in the United States. Let's go to the next slide. The third country on which fentanyl tariff has been imposed is Mexico. It's at 25%. That is, but this is a very specific tariff for 3 countries only. Let's go to the next slide. There's not much in here, so but you have to remember that drawback is not available with respect to IPA fentanyl. That is a significant aspect. But you will see that as I march through my presentation, for some of the duties, for some of the tariffs, drawback is available, and for others, it is not available. So that is something to keep in mind. Let's go on to the next tariff. Now the interesting part begins. Steel and aluminum. So in February, Trump issued 2 presidential proclamations under Section 232 of Trade Expansion Act of 1962, which is the source authority for imposing such tariffs. So this 232 tariff is imposed when there is a threatened impairment of the national security of the U.S. It is supposed to be imposed under those conditions, and United States government, Trump administration, claims that imports of aluminum and steel products and their derivatives, primary aluminum, secondary aluminum, and all that, they imposed a national security threat. Some would say this is a ridiculous claim, but it has been upheld by the court. So, and it has been imposed globally, as I said. Then going forward, on June 3rd, 2025, Trump issued another executive order where he adjusted aluminum and steel tariffs from 25% to 50%. He granted exemption only to one country initially, UK, whose duties remained at 25%. And subsequently, he has granted some leeway to some other countries also based on bilateral. And it's going on. It's a daily feature. So it's very hard to keep track of who is getting which benefit. Let's go to the next slide. Proclamation on steel imports. So as I said, when he assumed office, he reinstated 25% tariff on all steel imports and derivatives from prior Section 232 actions, and subsequently they were raised to 50%. Then this tariff is cumulative with any other applicable tariffs. And the important feature of this of this tariff is that it not only encompasses the primary aluminum and primary steel products, but their derivatives also. And that is very problematic, as we will see going forward. One thing to keep in mind is that on your bills of entries now, when you report, when you file those bill of entries, if you are importing steel products and aluminum products, you have to declare for steel country of melt and pour, and for aluminum you have to declare country of smelt and cast. So not only that you need to have an understanding about these myriad tariffs, but all of these tariffs have peculiar and stringent reporting requirements, and failure to do so can invite severe penalties, and you can often end up, if you're not careful, end up paying more duty than you actually owe, and sometimes less duty, which also both are problematic. And we will see what issues are involved in that. And I am not reading verbatim from the slides because I'm focusing on the key aspects. The important feature of Section 232, the second regime of Section 232 on aluminum and steel, is that, unlike last time, there is no provision for product exclusion. So it's a blanket levy on all the listed there are certain tariff headings which are under the umbrella of Section 232 aluminum and steel, but there is no way that you can apply to the Department of Commerce seeking exemption or exclusion from payment of duty, which was the case in prior administration. And all the exclusions that were granted previously, they will expire. After they expire, they will not be renewed. So that based on the new levies, the U.S. Customs and Border Protection has been directed to enforce any perceived misclassifications that avoid steel and aluminum tariffs and impose maximum penalty. So not only that these tariffs have been imposed, there is a threat that they will, if you're not careful, you will receive a lot of penalty. Next slide now. So the lists of the Section 232 aluminum and steel, they keep on every a couple of 3 months they keep on adding to that list, and they keep on modifying the list. So initially for Chapter 73 and 76 derivatives, there was a different provision. Now that has been eliminated. So now whenever there are derivatives, whether they are classified within Chapter 73 or 76 or outside of them, on the portion of steel and aluminum, you have to pay 50% duty. But on the remaining portion, which is non-steel and non-aluminum, you don't have to pay Section 232 duties, but you have to pay IPA reciprocal tariff duties on non-steel and non-aluminum content. And as I said, that you have to declare country of melt and pour for steel and country of smelt and cast for aluminum. And you can also see here that this derivatives, this expansion of Section 232, which is happening, it is encompassing a lot of household products and industrial products, lighting, stove, barbecue, cookware, aluminum door. I mean, it's just going to keep on expanding. But the valuation aspect is very critical. As I said, if there are derivatives of steel and aluminum, there are 2 tariffs that are imposed on the same product. On steel content, you will impose 50% Section 232 tariff. On the balance, you will impose non-steel and non-aluminum content, you will impose IPA tariff. Now, here is a very important thing. Because steel and aluminum are subject to 50% tariff, while non-steel and non-aluminum content reciprocal tariff ranges from 10% to 41%. So clearly there is an incentive here to lower your reporting of steel and aluminum content. Then people who try to lower their content, but there are rules, and it's not totally clear. And there are CSMS messages, which customs issues, and there are some executive other proclamations. And we at GDLSK are keeping we manage this show for our clients very effectively. We try to get that mitigation done properly. so that our clients benefit the most. And David, when he speaks, he will have something to say on that. But this is very important. Furthermore, on the next slide, are we on the next slide now? Yeah. There are some exceptions to imposition of Section 232 on steel and aluminum. They are provided under General Note 16 and 19. And it's important to know that goods, if they're classified in a listed subheading for Section 232 purposes, but even if they're not containing steel or aluminum, you have to report the country of melt and pour, smelt and cast. That is CBP's requirement. And for non-Chapter 73 and 76 derivatives, there are reporting requirements. You have to report kg for the finished product. And then for steel and aluminum content, the valuation of that is the price paid to the upstream supplier. But as I said, there are issues involved with that which we cannot resolve in this webinar. But I can tell you that there are a lot of issues which people are facing here. Finally, no drawback of Section 232 steel and aluminum tariff is allowed. Next slide, please. Okay, so automobile in April, Trump imposed 25% tariff on automobiles, and in beginning May, this was expanded to include automobile parts also. Then let's go to the next slide. This is also on auto and auto parts. So again, in beginning April, May, these tariffs started. And again, no drawback is available of the duties paid on these auto and auto parts. Next slide, please. Beginning November 1st, after this, yeah, okay, good. So now this Section 232 tariffs also has been imposed on truck and parts thereof. So now medium and heavy duty vehicles of certain classes and their parts are subject to an additional 25% ad valorem duty, while buses are subject to an additional 10% ad valorem duty. And please note that unlike auto and auto parts, Section 232 paid on this medium heavy duty vehicles, they're eligible for drawback. So you can see that there are a lot of exceptions you have to keep in mind. Next slide, please. Copper 232 tariff. Beginning August, a 50% tariff was imposed on copper and their derivative products. The same type of rule which I discussed with regard to steel and aluminum tariff. Similar rules exist also for copper and copper derivatives. And again, no drawback is available with respect to these duties. Next slide, please. Reciprocal tariff, the most famous of the tariff now. As I said, it started with a 10% imposition, 10% universal tariff beginning April 5th. And it sent a chilling message to the entire world and because after 90 days, these tariffs were enhanced, and Trump came out with a menu of differential reciprocal tariffs that he imposed on all the countries. Initially, it went from 10% to 50% actually in the first installment, and then it was subsequently amended, and now it covers 72 countries ranging from 10% to 41%. Syria maximum is 41%, and all the remaining countries, with one or two exceptions, it is 10%. Canada and Mexico have different rules. Let's go to the next slide. So China faced a big brunt of it. It went for them even up to 125% at one time. Then it was brought down, and now it is, I guess, only 10% for them also. Other countries, as I said, 72 countries ranging from 10% to 41%. If there is any evidence of transshipment, then a reciprocal tariff will be 40%. So people have to be careful about that. Another important feature of reciprocal tariff is that if US content exceeds or is over 20%, then for the portion of US content, there is an exemption from payment of reciprocal tariff. And again, that brings in the issue of valuation, how you are going to value. Just as I spoke about valuation in the context of steel and aluminum derivatives, how do you split the value of steel, aluminum on one side and non-steel content and non-aluminum on the other? Similarly here, in the context of IEEPA reciprocal tariff, how you are going to determine the US content, because you would like to increase, unlike in the last case for Section 232, where you want to reduce the steel proportion. Here you would like to increase the US content. So the rules are very interesting and they're very challenging when you apply from case to case. It's very case specific and product specific. On the right side, you will see that there are a lot of exclusions from reciprocal tariff. Informational materials and donation materials, they are exempt from reciprocal tariff. Any product in steel and aluminum and their derivatives, auto parts, and automobiles, copper, and all the whole list of Section 232 products which are currently on which currently Section 232 is imposed or an ongoing investigation is happening, they all are exempt from payment of IEEPA reciprocal tariff. And there are some more exemptions like Chapter 98 exemptions. So let's move to the next slide. So this is the list of countries on whom reciprocal tariff have been imposed, and the duty rates are reflected here. If we go to the next slide, we will see that on Turkey, 15% tariff is imposed. So you see, in a range of 10% to 41%, Turkey is towards the lower end of the spectrum at 15%. And therefore, we think that Turkey is better situated as compared to several other countries. That's a very good, you should be happy with that. Let's move to the next slide. There's nothing which is notable here, so I will move to the next slide. Again, this is very specific, but very quickly, this is an illustration of how it plays out in the context of specific products. So here, canned beer and bottled beer, if they're imported from, this is a comparison of if they're imported from Mexico versus Turkey versus China, how the duty rates play out. The MFN rate, which is the regular duty rate, plus fentanyl tariff, plus aluminum tariff, and plus reciprocal tariff. And in case of China, also 301 duties. As an importer of record or even as an exporter, you would need to know for any product all the different types of tariff that are leviable and from which country. If I am a US importer, I have these 4 options. So I will see that which option is most beneficial for me, and it can vary from product to product. That is what is coming out of this slide. Next slide, please. So other on subsequent and ongoing investigations are happening, and you should know them very briefly in terms of products. Actually, timber, lumber, and their derivatives, Trump already imposed Section 232, varying from 10% to 25%. The next slide. Right now, investigation is ongoing against critical mineral oxides and their compounds, oxalates, salts, and their derivative products, semiconductors, which is quite in news, as you know, rare earth minerals, pharmaceutical and pharmaceutical ingredients, again in news. Section 232 has not so far been imposed, but it is likely to be imposed based on the outcome of the ongoing investigation. Next slide, please. Similarly, commercial aircraft, jet engines, and their parts, ongoing investigation is going on, and we will see their outcome going forward. Next slide, please. The next 2 slides deal with de minimis exception, which was provided under US law for articles that are valued less than or up to $800, there was no payment of duty previously. But now this has been removed. First, Trump administration removed it for China, Hong Kong, and Macau, effective May 2nd, 2025, and new requirements of declaration based on whether it is postal versus non-postal shipment, and what will be the duty that was established for such de minimis imports. Imports of less than $800, which was previously de minimis, but no longer de minimis for customs duty payment purposes, with some, again, exceptions. And then, very troublingly, it was expanded to cover, next slide, to cover other countries also. So now this de minimis is denied to all countries effective August 29, 2025. And you can imagine the whole US retail industry, where people like us go for shopping also, Walmart, Costco, and what else you have, all the malls, they all used to thrive. Their business used to depend on this de minimis exception. And after suddenly removing them, and you can see what type of duties were imposed. It is significant. On this slide, you can see point C. Some tariff rates were established for such de minimis item, depending on what is the IPA rate of duty, IPA tariff from the country of origin. Based on that, they established differential payment of duties for such low value importation. But again, this is something which is very troubling. Next slide, please. Now we come to an interesting point. So I discussed a number of tariffs so far: fentanyl tariff, IPA, reciprocal tariff, and a lot of Section 232 tariff, steel, aluminum, auto parts. And not to forget, there is our old friend MFN tariff, which is reflected on the tariff schedule. And there are, in addition, Section 301 tariff from certain imposed on certain countries like China. There is sometimes anti-dumping duty, countervailing duty. A number of products imported from Turkey also are subject to anti-dumping and countervailing duty. So you are witnessing about 7 or 8 type of tariffs in play on any given product. The question is that, do they just stack on one another, or there are some exceptions, or there are some intrusions, and there are some. There is a dynamic which you would need to understand, because sometimes if you do not understand the intersections and interplay among these different tariffs, you would end up either overpaying or underpaying, both of which are problematic. So to simplify on this slide, if your product is auto or auto parts, then in terms of hierarchy, that sits at the top. So you can see if a product is an auto or auto parts, then it is not subject to either IPA fentanyl or Section 232 aluminum or steel. And then if it is subject to 232 aluminum or 232 steel tariff, then the other 232, if it is subject to 232 steel, then 232 aluminum also can be imposed if part of it is aluminum. So both of them can coexist. And as you may remember from my earlier discussion, if goods are subject to 232 steel and aluminum, they coexist with IPA reciprocal tariff also, because the non-steel and non-aluminum content is subject to IPA reciprocal tariff. On the slide which now David is sharing, again, this is another way to look at it. You can see, you can see point 3 onwards, for example. If auto and auto parts are being imported in United States, and if they're being imported from China, then there is 25% duty on those parts, plus a fentanyl tariff, IPA tariff of 10% applies. 232 steel and aluminum would not apply, and reciprocal IPA tariff is exempt if 232 tariff will apply. So But in case of Turkey, if auto and auto parts are being imported, then there will be 25% Section 232 duty. There is no fentanyl IPA tariff on Turkey, and there will be no reciprocal IPA tariff also of 15% on those products, and no Section 232 steel or aluminum tariff of 50%. So there is, I can see only 25% will be imposed if imported from Turkey. If it is imported from India, if auto and auto parts are imported from India, they will be subject to 25% IPA reciprocal, and in addition, they will also be subject to IPA Russian oil tariff of 25%. So a total of 50%. And if they're imported from Mexico and Canada, then 25% tariff will apply. Fentanyl tariff will not apply. Similarly, 232 steel aluminum and reciprocal tariff will not apply. For UK, also UK has some beneficial provisions. I will not go into detail. Similarly, point 4, if steel or their derivatives or aluminum or their derivatives are imported from China, you see, the 50% will be imposed on steel and aluminum content, and on non-steel, non-aluminum content, 10% will be applied. And on top of that, fentanyl tariff, IPA tariff of 20% also will be applied. As against that, if it is imported from Turkey, then 50% steel and aluminum tariff will be imposed on the steel and aluminum content, and IPA reciprocal 15% will be imposed on non-aluminum and non-steel content, and there will be no fentanyl IPA. So you can see between China and Turkey, Turkey is in an advantageous position. And similarly, there are other countries also. Again, one has to go through the list and see from which country it is the best. But the last point is important. Section 301, Section 201, which is safeguard, anti-dumping duty, countervailing duty, and regular customs duty. All these duties will stack on top of these all duties that we discussed on any product. Finally, I'll conclude with the ongoing litigation against IPA reciprocal and IPA fentanyl before Supreme Court. Oral arguments were held last month on November 5th, and a decision is expected in near future. Based on what we are hearing and based on our best judgment, we believe there is some chance that this tariff may be reversed. But if that happens, there is no automatic guarantee that importers are going to receive refunds. And there are a lot of complexities involved why it may not happen. And briefly, what we are doing here, we are advising our clients and we are following through. Many of our clients have accepted our advice and we are filing court appeals on their behalf. Even though the matter is currently pending before the Supreme Court, but we are filing these appeals very importantly for obtaining a preliminary injunction against liquidation of suspended entries, because under one set of theory, it is we believe that if there is some precedent out there that once an entry is liquidated, it becomes very hard, if not impossible, to obtain a refund. So in order to stop the liquidation, preliminary injunction from court is necessary, and for that you have to file a court appeal. We have been doing it, we have been advising, and we strongly advise any US importer. And if you have US importers in the audience, you can advise them that they can seriously consider this option. So with this, I'm concluding my presentation. I'm handing it over to David now, who will enter a juicy area of presentation now. Over to you, David.
Thank you. Just a little background here. What we're talking about here today is for general information purposes. We're not offering any specific legal advice. And what we're going to get into here is very complex, and what we suggest is before you enter into any sort of tariff mitigation strategy, that you consult with proper experts to make sure that you're doing it correctly. As Dharmendra mentioned, and has been publicized, the Trump administration now is going to be moving more heavily into the enforcement area. So and in that enforcement environment, they have signaled that they are not going to give significant mitigation. So before you enter into anything, make sure that you consult with the proper experts. So, you know, your tariffs are not necessarily a fixed cost. Depending upon how you're doing business, what your product is, where you're producing it, there are a number of different strategies that can help mitigate these tariffs. So when looking at your customs value, there are a number of different issues that can arise. And we'll talk about two of these programs that might be beneficial to you depending upon how you do business. But your customs valuation is, you know, something that should be looked at. Well, it should be looked at anyway from a reasonable care standard. You know, when you're dealing with a related company in the US. If it's an unrelated company, you know, hopefully the invoice equals your value and there shouldn't be much of an issue, but we'll come back to some of the valuation strategies in a minute. Tariff classification, you know, that's really an art more than a science. There are 50 some odd thousand line items in the US tariff that you get one of those codes for your classification. There is some interpretation into that, depending upon your product and depending upon the way you're doing business. There may be a way to structure it such that you can take advantage of what we call tariff engineering to get into a more beneficial tariff classification. Now, that doesn't get us out of the reciprocals, but that really focuses on our normal trade relations, or as Dharmendra referred to it, MFN rate. But you got to be careful because with all these various different tariffs, all of them tied to different HTS numbers, harmonized tariff schedule numbers, you want to make sure that you don't, you know, move from one provision to another that may not be as beneficial. Country of origin, it's not a simple issue. Generally, where your good is manufactured, where there's a change in name, character, and use will determine your country of origin. But invariably, you know, production these days includes a number of different countries. You're getting parts from countries, components, etc. Depending upon, you know, what your manufacturing is in your specific final country, whether or not that affects a substantial transformation. Customs in the most recent years has looked at what is the essence of the imported articles. So, you know, for example, with fragrance oils, the nature of where the oil itself was made, not where it's diluted and made in, let's say, to a body spray or something like that, will determine its country of origin. Same thing with more manufactured products, looking at what is the essential component of it in a lot of situations will determine the origin. And again, we'll talk about that. Oops, what did I do? Sorry, there we go. With these shifting tariffs and with the expansion of 232 tariffs and things like that, these are coming on us fast and furious, hopefully a little bit slower these days. But the key is, what is your date of entry? So most of our duty, well, almost everything except for, let's say, anti-dumping and countervailing duty there's really based upon our date of entry. And that date of entry defaults to when customs releases. And so there are some exceptions to that. If you're in the process of trying to beat an increase of a tariff or things like that, you should consult closely with the importers and customs brokers to make sure that they make entry in a proper manner in order to fix that date of entry. We saw a lot of problems with this, with the increased duties that went into effect, the in-transit exceptions and things like that. But even, you know, once you ship and the goods are here, there are some ways to delay duty payments. And one of those is bonded warehouses. common fixture in pretty much every customs jurisdiction. These are, when goods go into these bonded warehouses, they remain there without the payment of duty. If they're re-exported, no duty is paid. So if you're, sourcing goods from Turkey, importing them into the United States, and then re-exporting them to Canada or Mexico, there's a way to avoid the addition of the U.S. duty. In any case, the duties are deferred until they come out. So if we're, let's say, anticipating that the Supreme Court's going to invalidate the IEEPA duties, it may be wise to put your goods today in a bonded warehouse and wait for that decision. If the decision goes favorable, you may be able to avoid those duties. Maybe. We always have to worry about, how the court's going to determine that, the application of that. There's also ways of working with, there are Chapter 98 provisions, country of origin provisions. One of the ones that we've worked with some Turkish suppliers and suppliers of jewelry around the world is by casting goods here in the United States, they become a product of the United States. They're allowable under a special duty provision, which we call Chapter 98, for the U.S. content to come back without any duties. Regular duty is paid on the foreign processing or labor charges and content added. But because it's a U.S. product, because of the nature of the way it's done, it avoids the reciprocal duties totally. Okay. There is also a provision for exemption of U.S. content. We have to be careful with this. There's not a lot of rules on it. And in the jewelry industry, we're seeing that people are, exporting U.S. gold, whether alloyed or non-alloyed, and perhaps claiming that it is U.S. content. Until we get some rules, I think this is a very risky provision. But, if you're using U.S. components, the idea is tracking them through your supply chain so that you can take advantage of this. It's not just jewelry. It can be used in any industry, but it's going to require that you have very detailed tracing on your supply chain. When looking at all these issues, the question comes up normally, is this tariff engineering legal? Yes and no. Yes, it's been accepted by the CBP and the courts, but it must be legitimate. It cannot be an artifice or some sort of deception in the transaction. If they're properly invoiced, presented to customs for examination, the tariff engineering is proper. We would also suggest that customs has a binding ruling program. Those rulings can secure your, basically, as it says, it's binding on the customs service. So if they agree with your classification in a ruling, that is applicable until such time as customs modifies or revokes it. Okay. So tariff classification relies on a number of issues. What is your product? What is it composed of? And today with the reciprocals, where is it made? We'll talk about that separately. Then it goes into one of these 50,000 plus classifications or HTS numbers. You can change the classification of a product in its current form if it is permissible. There's significant chapter notes, section notes, explanatory notes, all of which dictate how a classification should be interpreted. That's why I said it's more of an art than a science. There's also ways that, you can modify your shipping arrangements. I'm not talking about transshipping through another country. What I'm talking about there is more of a situation of perhaps segregating your components to different shipments such that they would be subject to different classifications upon their arrival. I did this in the situation with loggers, logging trucks. The front portion, the basically the semi portion of it come in under one provision. The bogie or the trailer comes in under another provision, and they were joined up here to avoid significant duties on trucks. So you can, that's one way. The other way is, of course, look at your product, perhaps by changing the product in a certain way, not to make it, different for your customer, but some changes in a product can significantly change the classification. Even so, you're in an existing classification. There are ways to take a look at it. Maybe, where you are is not 100% correct. Maybe the best way would be to just re-examine that. And we did this for a client recently, and we were able to get them into a better duty rate in the example there with certain gators. But re-examining your tariff classifications, one from a reasonable care aspect is key, but also it may provide you with opportunities of savings. This is another situation where we, restructured the transaction such that it was allow for a more beneficial tariff treatment. Again, each one of these classifications has both its benefits and its downsides. You want to make sure that you are entering the proper under the proper provision, but there are also other aspects of customs administration that can help you with this. And this is what I said, changing the shipping arrangements. Here we had a significant issue of cranes that when imported as parts were subject to 232 duties, but the finished crane was not subject to 232 duties. In order to take advantage of that, they changed their shipment protocols such that either they're on one shipment, and meaning on the same ship, even though they might be different containers, things like that. And there is a provision under the customs laws that allow you to classify that in the condition as imported, meaning it's imported together as an unfinished or unassembled article, that allows you to meet the classification for the final good. Okay. Country of origin. And there are literally dozens and dozens of country of origin rulings that customs issues pretty much, on a regular basis. Yes, it's where the product is made, but the underlying standard is different depending upon which, country you're in. Certain countries have a value added requirement to be called, let's say, a product of Turkey. I'm not sure that's the Turkey standard, but it is in some countries. But in the United States, it's where the last substantial transformation occurs. So if you have a product that is being made with components from another country, if there is a significant change in name, character, and use, then there can be a change in country of origin. Again, as I mentioned earlier, what is the essential component of that? Does that dictate its classification? That may dictate also its country of origin. If you can source parts from other areas, you may be able to get a more beneficial country of origin determination. When we get into free trade countries, each free trade agreement has its own country of origin rules that make it more problematic, from a compliance standpoint, but it again also can present opportunities. So looking at your supply chain and your production methodology is significant to make sure that you may be able to take advantage of a change in country of origin. Okay. Again, just like with classification, if you're going to come down to a change in country of origin, one of the best things to do is, of course, don't do it on your own. Go to an expert who can help you make that determination before you start making any changes. And again, customs will issue a specific ruling to you, based upon the facts that you've presented. Again, going back to the jewelry example, we've been very successful because the essence of a ring, for example, is made by the casting of that ring. That determines what the country of origin is. When we're talking about diamonds and gemstones, where they're cut. Printed circuit boards, where the printed circuit board is assembled. Now you put that printed circuit board, let's say, into a Game Boy or something like that. The essence of that article may be the printed circuit board, and that may determine its country of origin. So it's significant where that occurs. And that's, we've had success in moving the production of PCBAs from one country to another in order to affect a country of origin change for the final article. Garments, they have their own rules. Those rules are a little bit different than this substantial transformation. When we're talking about cut and sewn garments, it's generally where it's wholly assembled. With knit to shape garments, it's determined where they are knit. And flat goods, it's, where the fabric is made. So, there are some very interesting rules there, because if we source the fabric from one country and we're making scarves, we may be able to take advantage of the country of origin of that fabric rather than the final production of the scarf itself. Again, here's some more examples. I believe the slides are going to be made available. So, if these are something to look at a later time when you've got some time to dig into specific examples of these. And like I said, each one of our products is going to have a unique determination. This substantial transformation standard is based upon a totality of factors. Cost of production, time of production, complexity of production, and again, what is that essential component of it that's going to determine? For example, footwear, where the upper is formed, that will determine the country of origin. So if we can have that upper formed in a beneficial country, that's going to determine the final country of origin of our shoe in most cases. Okay.
Does VN stand for Vietnam?
Excuse me?
Does VN stands for Vietnam?
Oh, yes, I'm sorry.
Okay.
In customs, we use a lot of acronyms, so I apologize for that. But
no,
yes,
it's understandable.
Yeah, and CN, I believe I referred to, of course, as China. So I apologize for that.
No problem.
It's something to keep in mind. Make sure we don't use too many of them. Okay. Again, more examples, but let's not spend time on that, because one of the key areas that is subject to possible modification is our valuation. Yes? Okay, I'm sorry. So when you sell goods to the United States, where you're the importer and you're buying goods into the United States, the key here is what is the total price paid or payable for those goods. When we're talking about related parties, where the foreign exporter is related to the U.S. importer by ownership, blood, etc., that transfer price is something that customs is going to look at. There are ways to modify that to make sure that it is not excessively reporting value. When duty rates were low, nobody really was concerned about that. When we're talking about unrelated transactions, customs valuation should be fairly simple. What did I pay for the article? But there may be ways to parse that out, as we're going to see, that may be able to even limit those in unrelated transactions. So a very common strategy is what we call first sale. This is an idea that's been around since, I believe, the late 80s, where the value is assessed based upon the total price paid or payable, as I said, but there's also a phrase in there, when sold for export to the United States. So in a number of transactions, there are situations where you have two sales. The factory sells it to a middleman, the middleman sells it to the US importer. In those situations, if properly structured, the sale from the related or unrelated factory could be considered a sale for export to the United States. In that situation, the first sale can be used for customs entry purposes. So in effect, here we have an example. The first sale is at $700. The second sale is at $1,000. So you would reduce your import value to that $700. Now, again, like with any of these strategies, I would not jump into this first sale transaction without having it properly vetted. Customs doesn't usually issue rulings in this context, but having it properly vetted by a professional is key to make sure that you're doing it right. Careful, the idea of just splitting off costs on a separate invoice is something that Customs is very aware of. And some people try to state that that's what they're doing in a first sale transaction, but in essence they're just simply issuing two invoices. In that situation, you could get yourself into trouble if it's not properly set up. Again, there are certain costs that will be non-dutiable. Similar to first sale is the idea of buying agency. There are a number of companies that are sellers throughout the world that work on behalf of many U.S. importers and act as a seller. But again, this is also a multi-tiered transaction where the agent or the middleman is actually can be structured in such a way that they collect a commission rather than a markup, and that markup, that rather than the markup, that commission can be rendered non-dutiable. Now there's certain requirements for it. There has to be a proper agreement between the importer and the agent's activities are restricted. They cannot receive a portion of the payment that goes for the goods. They can receive only the commission, and their commission would be to reimburse them for certain types of services, as long as those services fall into one of the categories we've listed here. Then that entity could be treated as a buying agent, and its commission could be exempted from customs duties. Again, like a first sale transaction, you sort of have a multi-tiered situation, and there may be ways to restructure current operations in order to fall into this sort of structure, which would allow you to take advantage of the buying agency structure. Again, as I said when I began, we're here for information. We can't give you specific advice without looking at specific transactions, and each one of those transactions might have a different determination. So you got to be careful here. The government is the U.S. government is ratcheting up its enforcement in these areas. So you want to do it right. But with everything here, what you want to do is make sure that you examine your transactions, because the tariffs shouldn't be considered a fixed cost. There are opportunities there to structure your transactions to take advantage of it, but it must be done with transparency. Make sure that your information presented to customs is proper and complete, that you've done your research, that you're able to support it. Again, relying on an expert, make sure you're exercising reasonable care. Talk to other, colleagues to see what they're doing, to make sure that they're doing it right. Again, at the end of the day, when we're talking classification and several of the other issues, the special duty programs, there's always opportunities to get binding advice from U.S. Customs to nail that down. Now, we wanted to leave some time here for questions and answers, so I will stop sharing and we can answer any questions that you have.
Yeah, thanks, David. Thanks, Dharmendra again. Actually, when I look at the transcript, there are two questions. One is coming from Mr. Fuat Aşıcıoğlu. He just wants to ask that for the Supreme Court appeals, are they going to be applicable for Section 232 tariffs on critical minerals? So the Supreme Court appeal would be applicable to critical minerals or not?
Well, the Supreme Court appeal right now is specifically on the IEEPA case. And even there, it doesn't address the Russian oil tariffs, the Brazilian additional tariff, the Venezuelan tariff. So there's a lot of other things. 232 as a concept was challenged previously. That challenge, unfortunately, was unsuccessful in the context of steel and aluminum. The court said that the president had the authority to impose those duties because he determined there was a national security threat. Steel and aluminum, it's a little bit more clear. As we get to other things like upholstered furniture, I'm not so sure we can, state a national security thing. It's based upon timber more than anything else. Critical minerals, copper, your guess is as good as mine, but chances are, because of the existing precedent, that would be a very difficult challenge to face, to win.
Okay. So there's another question from Mr. Metin Yaraş. They are importing copper scraps. They are importing copper scraps, and they are by using these copper scraps, they are manufacturing copper wires and sending to USA. Any import duty?
Okay, so the question is the origin of the copper scraps.
Yeah, sure, I see.
If it was, let's say, U.S. origin, that you might fall into this U.S. content idea, and the value of the copper might be exempted from the reciprocals. Copper wire, of course, is subject to import duties and would be subject to the reciprocals as well from Turkey, unless we can find a specific exclusion.
So
possibly also 232. We have to check the HTS heading because now copper is also subject to 232.
Right.
Yeah. But if these copper scraps are imported from US, then the US portion would not be imposed upon any customs tax.
Right. There's a specific HTS provision for US content, and you can declare that value separately, and that would be exempted from the reciprocals. It would not. I don't believe it gets out of the 232. No, it doesn't. So, but again, before you do that, you should have it examined and make sure that it is, qualifies as U.S. content. And Dharmendra, I'm fairly certain, right, that the 232 would still apply. The U.S. content exemption is really for the reciprocals. That's your understanding as well, correct?
232 would apply. Yeah, so there is no US content exemption for 232, no?
Right.
So far.
Right. That's the reciprocal.
Yeah.
Mr. Metin Yaraş, the floor is yours. Please, you can ask, of course, your question.
Metin Bey, you can ask directly.
Unmute yourself and ask your question if that's.
So yeah, the main concern is the Section 232 on copper.
Right.
Let's see. Mhm.
And with the 232, unfortunately, there are not a lot of exclusions from it. And as Dharmendra mentioned in his presentation, there is this process where periodically, I think it's 2 or 3 times a year, the Department of Commerce solicits requests to expand the 232 list. So we've seen some pretty absurd expansions. For example, body sprays that have a spring in the trigger mechanism are now subject to 232. You know, it's just on steel and aluminum. So you just, you know, it's risen to a more difficult thing to administer. One of the things I forgot to mention, but you should also take a look at, is a thing called what is called Annex 2 in the reciprocals. There are certain products that are exempt from reciprocals. A lot of them are food products. That list keeps changing. For example, when they announced the 232 on upholstered furniture, it moved from Annex 2 to the 232, along with several other materials that were, you know, did not get assessed 232, but they got dropped from Annex 2. So you got to, you know, if you're looking at those specific classifications that are exempt from reciprocals, you got to keep an eye on that list because it is constantly changing.
And also similarly, I will add that even if it comes to products like auto parts or steel derivatives, aluminum derivatives, you have to check the HTS headings that are, I mean, it's not that any aluminum derivative is subject to 232. There is a specific list of HTS headings. It has to fall under one of those HTS headings only then. I mean, presumably it covers the vast majority of aluminum derivatives and auto parts, but we have seen exceptions that we have found that they do not fall sometimes. So. And again, as David mentioned, it's a tariff engineering. If you can move it out of that list to a HTS, that is not. I mean, it's an interplay between different tariffs. Something that is not subject to 232, IPA will be imposed. But between the two, we have found that IPA is lower as a general matter as compared to 230. Again, product to product, one has at least steel and aluminum. It is definitely IPA is lower.
And you know, talking about all these various strategies, and I've probably emphasized this several times, you know, the administration is in an enforcement mode. You know, you want to make sure you're doing things right. The U.S. importers, the person that's in the sites primarily, you know, they are the ones that it's going to be targeted first. But I wouldn't put anything past the administration of blacklisting companies overseas. They, you know, they did this in the past in the textile and apparel area. You know, even though there may not be an official blacklist, the customs officials do maintain information on foreign suppliers, and if there are foreign suppliers they believe are assisting in invasion, they get put on an internal list, and not only does that direct importer have issues, but any other importer from that manufacturer has an issue.
And to David's point, and especially what he spoke about first sale, I have had clients who will do some chat GPT research and try to gap fill, try to obtain some information from us to gap fill their knowledge. You know, that is a dangerous route. If I am an importer, I will never do that. But there are inherent complexities, and first sale is not a. There are a lot of options, deductive variable, which David did not have time to go through it. computed value, deductive value, and all that, buying agencies versus first sale. There are a lot of options, and it's tailored to particular situations. One option may be better than the other, and maybe the other option is not good option at all. And what CBP can red flag it going forward. So while saving duties, you have to choose the right strategy under careful guidance of person who has handled hundreds of such cases. Because CBP, as David said, is in an enforcement mode. Everyone is riding the bandwagon of first sale. So you have to be careful if you are going that route.
Right.
Generally speaking, the real target is not countries like Turkey, but I think China, Canada, Mexico, and maybe EU.
Yeah, it seems that way at this point.
At this
You know,
point.
Yeah,
right. And, as well, like the EU, they've sort of settled the issue with the administration. They're still negotiating. So even though they've made a deal, no deal is complete. It's always subject to revision. They're talking about trying to get some exemptions from the 232 tariffs and those sort of things as well. And each country, is sending their representatives, to try to get something from the administration. And as Donald Trump said, it is the art of the deal, right? So,
yes, you're right.
Yeah. And I will just quickly add, you see, the first target of Trump's attacks when he came back into power was China, as you know. And our experience shows, and David knows it more directly, the maximum number of clients we had for first sale was were from China. I mean, think of it. They were subjected to such a high tariff, and instead of just running away from the arena, they doubled down. They came to us for guidance in the maximum number. So, I mean, in a way, this is an opportunity to rethink your strategy and something which you should have done a long time ago, but simply because tariffs were so low anyway that you did not think about it. But now, if you think, let's say, if you establish first sale, this is going to stand you in good stead going forward for all time.
Yeah, so we have to play the game for the new rules, right? The rules
right.
of the game has changed, so we have to adapt.
Yeah.
Yes, absolutely.
And take advantage of any, I don't know, take advantage of this, you called tariff engineering, of course.
Yeah.
Yeah.
Again, it's always a game of comparative advantage. You see, I mean, you have to beat back your competitors. There are so many people in the market. Either you have two choices. Either you run away from the market, stop doing business. If you're into business, then play the game rules, plays as per rules, and take right advice and structure your transactions accordingly.
And ingrained in all of this is the idea that you are allowed to take advantage and properly of these opportunities. Like tax strategies, that if you deal with a tax advisor, they structure things in a certain way in order to lower your tax liabilities. That's the same thing here when we're talking about customs. Properly done, these are perfectly legal to take advantage of.
Yeah. Mr. Metin Yaraş, of course, you can ask a question.
Mr. Yarash, you can also open your microphone. There is no problem. You can ask directly.
Perhaps you can unmute his mic for him.
We opened.
Okay. Okay, maybe he's having problems with his mic. Okay. Or type in the question. We'd be happy to answer it.
Yeah, okay.
Maybe.
So we welcome any other questions that might come from our colleagues, our guests.
I'm sorry.
Well, thank you for the opportunity to speak with all of you. I hope you found it beneficial.
Yeah. Thanks
Yeah.
for the
Yeah,
presentation.
many thanks. I think it was long in the making. Reşat and I have been planning it over last 4 months, and David, and we finally found a good time and place to have to hold this. And Reşat is a dear friend. Over last several years, we have been working together, no, on so
Thank
many
you.
separate country value issues and media. And I hope to kind of enhance our collaboration on these issues. Hopefully, with now we know so many people here spanning across industries. Especially, I saw there are a lot of people from aluminum industry. I was checking some familiar names. So hopefully, they will have some issues, and we can assist them in due course.
Okay.
I suppose there's not any more question. We thank you very much, all of you.
Thanks.
Have a nice day. Thank you very much.
Thank you. Thank you.
Thank you.
Have a good evening. Thanks.
Good evening.
Thanks,
Thank you,
everyone.
Mr. President. Thank you, Dharmendra. Thank you, David.
Thank you.
Thank
Thank you,
you.
Reşat, once again.
Thank you very much.
Bye-bye.
Thanks, everyone.
Bye-bye.
Bye. Thank you.